Hello investors and future investors, welcome to the channel. For today's video we're going to be doing live trading. I'm going to show you a live trade with my entry points as well as my exit points, and I'm going to show you how I'm going to use one single option strategy in order to make income to grow my options portfolio. Now, if you are new to options trading or you're trying to use options in order to make some additional income, then you so happen to stumble onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, I'm going to be giving you a step-by-step walkthrough of a simple option strategy that can be used, particularly if you're trading with a small account. I'm going to show you how to use minimum amount of money in order for you to do an option strategy with a small account portfolio. For today's video, our stock that's going to be featured is going to be none other than Robinhood Markets, and that ticker is HOOD. For those of you guys who do not know, Robinhood is trending right now because it has been confirmed that Robinhood is going to be added to the S&P 500. I recently made a video right before this one that highlights 3 different option strategies that can be used if you want to trade Robinhood. So feel free to go ahead and check that option strategy. For today's video, I'm going to be doing one of those option strategies live to show you how it's done. Now we're going to go ahead, we're going to go to trade hood options down to the bottom here in order for us to go ahead and open up our options chain. Now this entirety of the information down here that I'm circling is what's known as the option chain, and what the option chain does is that it gives us enough information in order for us to go ahead and make a very informed decision before entering any option contract. Now, speaking of options contract, before I go ahead, I want you guys to do yourself 2 favors. Favor number 1, always make sure to do your own due diligence before investing. What may work for my portfolio, quite frankly, may not work for yours. Favor number 2 you need to do yourself. Always make sure you have an exit strategy before entering any options contract. That way, if the trade do decide to go tits up, then at least you know how to get out of the trade. That being said, let's get ready to rock and roll. Now, for this option strategy, this one is going to be a 2-leg option strategy. So the first leg, we're going to go to sell, we're going to go to put, and now we're going to select our strike date. Just for the purpose of this video, I'm going to go with the strike date of October 3rd, which gives me around 23 days to expiration. For this particular option strategy, feel free to use September 26th or October 10th. They're all going to work quite well. So I'm going to stick with October 3rd, 23 days to expiration. Now, this first leg of this option strategy is going to be a sell option. So whenever you do a sell option, you're going to receive money right away. Now, what I'm going to do, I'm going to go ahead and choose my strike price. The strike price I will be going with is going to be the $115 strike price, and that gives me around a 73% chance of profit. Now, a 73% chance of profit is really good for me because this option strategy happens to be below the current share price. Whenever you decide to go ahead and do option strategies above the share price, then you should consider using a higher chance of profit. And the reason for that is that the market goes up way more than it does go down. So with my 115 strike price and my 72% chance of profit, I'm going to be paid. The amount I'm going to be paid is going to be $3.70, or in the real world, that's going to be $370. Each option contract contains 100 shares. So you simply multiply your 3.7 by 100 shares, and that should give you $370. Now, these prices are fluctuating because, like I mentioned, this trade is live. So this is the first leg of this option strategy, and this first leg is known as a cash secured put. The cash secured put is going to work perfectly well if you're trading with a sizable options portfolio. But the whole purpose of today's video is to show you how to do this exact same strategy that can work for a big portfolio if you're trading with a small portfolio. So what we're going to do now is that we're going to go ahead and we're going to choose our second leg for this option strategy. Now, for those of you guys that haven't yet, this would be a perfect opportunity for you to go ahead and like the video and subscribe to the channel for more live videos just like this. I do, in each and every single one of my videos, I do give you a step-by-step walkthrough and also option strategies that can help you grow your portfolio. So feel free to subscribe. Now, for the second leg, we're going to go to buy. We're going to maintain our put, and we're going to maintain our strike date as well. Now, for this instance, I'm going to go ahead and choose my secondary strike price, and that's going to be below the previous strike price of 115. Now the price I'm going to be going with is going to be $114. Now this one now is a buy. So now that we're buying, we're going to have to pay. The amount we're going to have to pay is going to be $3.50. Now, the amount of money you're going to get should ideally be the difference between your sell here and your buy here, but you're going to see it's not going to be an exact science. It's not going to be $15 once I go ahead and hit continue. But before I do that, I want to bring something else to your attention. In order for you to do this option strategy, which is known as the put credit spread, you're going to need to leave some kind of collateral. Now, the amount of collateral you're going to leave is always going to be the difference between your spreads. The reason why it's called a spread is because you have two strike prices and there's a difference between them. Now, the difference between this particular spread is going to be your 115. You're going to minus your 114, and that's going to be $1. So this right here is known as a dollar wide spread. With a dollar wide spread, automatically you can tell yourself that your options collateral is going to be $100. And the way you get that is that whenever you have your spread, in this case $1, you multiply that once again by 100 shares, and that's going to give you $100. So in order for you to go ahead and do this option strategy, you need to have a minimum of $100 in your account portfolio. Now let's go ahead. We're going to hit continue. We're going to hit review. And there you have it. So I did tell you it's not an exact science, so you're not going to get the exact difference between the 3.7 and the 3.55. Robinhood makes some slight adjustment. So once I go ahead and execute this strategy, which I will do shortly, I'm going to be receiving money. The amount of money I will be getting right away is going to be $29.92. Let's round it up to $30. So I'll be getting $30 in my portfolio right away. That $30 is obviously going to be mine to keep, and that does not matter which way this trade goes, whether this trade go against me or the trade goes in my favor. This money right here is going to be mine to keep. Now, like I mentioned a few seconds ago, in order for you to do this option strategy, you will need to leave a collateral, and the collateral is going to be $100. Now, of key importance, what I really like to highlight is not really the monetary value. The monetary value is good as well, but I like to always highlight my ROI, or my return on investment, which means how much money am I going to be receiving for the amount of collateral I'm going to be putting up. So what you do is a simple calculation that's going to give you a percentage ROI. So you're simply going to divide your $30 that you receive as your options premium. You divide that by your $100 that you left for collateral, and that's going to give you a 30% return. A 30% return is extremely lucrative return. That's a very, very high return. Now, for those of you that are risk adverse, what you can do in order to minimize your risk is that you could go lower and choose strike prices a lot lower than what I have chosen. And for those of you that are risk tolerant, if you want to make even more premium, then feel free to go even higher strike prices, which is going to be closer to the actual share price. So once again, if you're risk adverse, lower your risk, go even lower. If you're risk tolerant, go even higher, which is going to be closer to the share price. Remember, always do your own due diligence before investing and make sure you know what's going to work for you and your portfolio. The only person that's going to know what works for you and your portfolio is always going to be you. Now, let's go ahead. We're going to be receiving a 30% ROI. Now, exit strategy. Remember, before getting to any options trade, you always make sure you have an exit strategy. Robinhood is trending right now and is going to continue to go up as it comes closer to being actually admitted into the S&P 500. So what you need to do, you need to manage this trade as much as you can. So as soon as I go into this trade, my exit strategy is going to be whenever I realize a percentage gain of about 75% of this credit, I'm going to go ahead and close this option. Now, if you guys do not know what I'm talking about, just go ahead and check out my videos on options exit strategy, which is going to give you a walkthrough of what I'm talking about. So what I'm going to do, let's just use some simple numbers. So I'm willing to give back the market $5 of this $30 I'm going to be receiving. So that means when I'm up on the trade of $25, I'm going to go ahead and close this trade. I'm going to lock in my $25. I'm going to pay back the market $5, and I'm going to have my $100 released back to me. So that's my exit strategy. Now let's go ahead. We're going to hit submit, and this should be filled pretty quickly. Let's hit done, and there you go. That was filled. So how does this trade work? Well, all you need to do, and you guys could see the trade is live right here. So in order for you to win this trade, all that needs to happen is that on expiration date or before, if this share price right here happens to stay above the $115 price, which was your sell put, then you're going to keep the entirety of the $30 and you're going to have the $100 released back to you in order for you to go ahead and do another option strategy, or you could just keep it in your portfolio, whatever you want to do. Now, the other way this trade could go is that come expiration date or before, if this share price happens to fall below your $114 price here, then you're going to get to keep your $30. Remember, that $30 is always going to be yours to keep no matter how the trade go. However, you're going to be losing your collateral of $100. Now, the entirety of the $100 will not be lost. The actual amount you're going to be losing is going to be your $100 minus your $30. Remember, you did receive $30, so that lowers the amount of money you put at risk. So the actual amount that you actually put at risk to make $30 was $70. So if the trade goes against you, the amount you're going to be losing is only going to be $70. Hence, this works perfectly for a small account, because if you lose $70 on a trade, that's not enough to blow up your account, unless your account is only $70, of course. So there you have it, investors and future investors. That is the option strategy that I did right now today in order to capitalize on Robinhood momentum. Like I mentioned before, if you guys want to see 3 option strategies that can be used in order to trade Robinhood right now, go ahead and check out the video right before this. I will link it in the description below as well. Now, for those of you who have made it to the end of the video, you guys are the real investors and future investors. If you haven't already, now would be the perfect opportunity for you to go ahead and like the video. Also, subscribe to the channel. Here's the most important thing though. I do create all this free content in order for me to help as many people out there start making income with options trading. So if there's anyone out there you know struggling to grow a small account portfolio, then the right thing to do is to go ahead and share this video with them. Together, let's help as many people as we possibly can start making money with options trading. Now, until the next video, keep pushing your investments.